Hi, today we are going to have a look at the 2019 Leaving Cert higher level tabular statement question. First of all, we are given a balance sheet and then we are given some transactions during the year. Then we are asked to record on a tabular statement these transactions. First of all, we have to start with the opening balances. So when we have our question laid out, the first thing we'll bring are our opening balances for the assets and the liabilities. So the first thing that we will put in are fixed assets. So land and buildings will go in as 660,000 and depreciation will go in as minus 33,000. And then delivery vans will go in as 85,000 and depreciation will go in as minus 38,000. Then our current assets will go in. So stock is 57,120. Now, with debtors, in the question, it says debtors less provision of 5% is 78,280. Now, we're going to split that into the actual debtors figure and then take away the provision separately. So this 78,280 is 95% of debtors. So to get the full amount of debtors, we just get 78,280. Divide by 95, multiply by 100 is 82,400. And then the provision would be the difference between the 78,280 and the 82,400. Which is minus 4120. And again, these two figures here, they should net down to 78,200 that is in the question. And we won't worry about goodwill or insurance prepaid. They will be added to the question later on. There's no opening balances for those. Next, we will have a look at our liabilities. So the first liability, again, we're going to put in just our current liabilities here from the question. So creditors are 64,000. Our bank overdraft is 24,000. Expenses due are 7,000. Then if we go back to the question again, put in the remainder of the figures, ordinary shares are 450, share premium 59, and profit and loss 205,400. So they will just go into the opening balances. And again, these in yellow, they will come into the question later on. There are no opening balances for those. So now just to total them and make sure the opening balances add up. So both of them come to 809,400, which is correct. Now, the first transaction is in January. So if we go back to the question, it says Miller decided to revalue land and buildings at the start of the year at 800,000. The land element is 130. Now that's only relevant later on when we come to work out the depreciation of buildings. So they revalued to 800,000. So at the moment, land and buildings are 600,000. So to get to 800,000, we just need to add 140,000. Now they're 800,000. When you revalue land and buildings, you have to take out the depreciation. The depreciation at the moment is minus 33. So to take it out, we're going to put in a plus 33, which will bring it to 0. Then we just total the two of those, which come to 173,000. And then that 173,000 will go into the revaluation reserve below, down in liabilities. And that's always the way the revaluation reserve is done. The next month, February. So Miller bought an adjoining building. So when they bought this building, there were assets and liabilities, which are all listed there. So we just have to put in all these assets and liabilities, and the difference will be goodwill. And again, this is a common adjustment that comes up. So the first thing we have are buildings of 120 and delivery vans of 35. delivery vans or vehicles are 35,000. It then says that debtors are 15,300. It says creditors are 11,000. And the question says the purchase price was discharged by granting the seller 140,000 shares. So share capital, ordinary shares or share capital will go up by 140,000. And a premium of 30 cents per share. So the share premium is just going to be 140,000 by 30%, which is 42,000. So now we total the liabilities. They come to 193,000. At the moment, our assets come to 170,300. So the difference between 193,000 and 170,300 will go into goodwill, which is 22,700. So the balancing figure, and that's why I have it highlighted there, the balancing figure will always go into goodwill. So I just total the assets. So each month I'm going to total my assets and total my liabilities to make sure that they add up to the same figure. In March, it says management have decided that provision for bad debts should be reduced to 4% of debtors at the end of March. So we just have to get our most recent debtors figure and then get 4% of it. So just a little working on this. The bad debt provision should be 4% of debtors. So if I go to my assets and I look at debtors, debtors are 82,400, but don't forget to add on the adjustment to debtors, which was a further 15,300. So in total, debtors are 97,700. So the bad debt provision should be 97,700 by 4%, which is 3908. At the moment, the bad debt provision is 4120. So the difference between 4120 and 3908, there is a decrease in a bad debt provision of 212. So I need to decrease my bad debt provision by 212. So at the moment it's 4120 and that's a minus. So to decrease it, I'm going to put in a plus 212. And a decrease in a bad debt provision is good. So our profit and loss balance is going to go up by 212. It will be the opposite. It would be a minus if it was an increase in a bad debt provision. So again, I'm just going to total my assets, come to 212. And again, total my liabilities, come to 212. The next adjustment is May. So again, this adjustment always comes up. We received a statement in May showing a direct debit of 4,800 to cover insurance for the year ended 31st of 4th, 19, and a credit transfer of 8,800 to cover rent receivable in advance for the period May the 1st, 2018 to 31st of March 2019. We're going to work out the adjustments for these in December. We're just going to put in the figures here and we'll sort them out in December. But first of all, we just have to check, is the insurance due or is it prepaid? Now we're doing up to the end of 2018. So if there was insurance paid for 4 months in 2019, that will be insurance prepaid, which would be an asset. If there was insurance due, it would be a liability. So we just have to be careful that we put it in up here. It's not an expense due down below. It's insurance prepaid here. And we're going to put in the full amount of 4,800. And we work out the prepaid amount in December. Then for the rent receivable part of it, it says we got rent receivable in advance. So basically we received 3 months extra rent. So we really, at the end of the year, we effectively owe that rent back to somebody. So it's going to be a liability, and that's the way it always is in this question. It's rent receivable prepaid, which is a liability. So again, I'm going to put in the full amount there, which is 8,800. And then the last adjustment will be in bank. So we've received 8,800, which is good. We paid out 4,800, which is bad. So we're up 4,000. And that means our bank overdraft will go down by 4,000. So again, it's going to add up my assets. And I'm going to add up my liabilities to make sure they balance, because each month these should balance. 4,800 and 4,800. The next adjustment is September. A dividend of 5 cents per share was paid in all issued shares. So this is an easy enough adjustment, but you just have to make sure you take the most up-to-date share capital. So if we look at the question, go down to liabilities and share capital, there are 450,000 shares at the start and then an additional 140,000 shares. So in total, there are 590,000 shares if we add these. So ordinary shares, 590,000. The bad debt provision is, in the question it says that the dividend is 5 cents per share and they're €1 shares. So it's 5 cents or 5%. So if we work out, the dividend is 29,500. And if we pay out a dividend, that means that the bank overdraft is going to go up because it's money going out. And it also means if we pay out a dividend, it's going to reduce our profits, because at the bottom of a profit and loss account, you would take away dividends paid. So it's going to reduce our profit to 29,500. So in this month, there is no adjustments in assets. So they are going to add up to 0. And down the liabilities, we have a plus 29,500 and a minus 29,500. So again, they are going to add up to 0. So it balances. The next month, November, a payment of 840 was received from a debtor who had previously written off and now wishes to trade with us again. So this 840 represents 70% of the original debt, and he is going to pay the remainder of it next year. Because he's paying us on the same day, goods to the value of 780 were sold on credit to Ryan. This was a markup on cost of 20%. So there's two things going on here. There's a debtor who was previously declared bankrupt and now is actually going to pay us. It's a bad debt recovered. And because we're getting the money, we are going to sell him goods again. So we're just going to do a little working for November. So in the question, it says we received €840. And that €840, it says, is 70% of the debt. So to work out what the full debt was, if we get 840 divided by 70, multiplied by 100, the full debt would have been 1,200. And then what he still owes us is the difference, 360. Now, because he's paying us, we're going to sell him goods again. And it says that the selling price of these goods were 780,000, which is cost plus 20%. So that the selling price is 120%. So to work out the cost price, we get 780 divided by 120, multiplied by 100. The cost price would have been 650. And the profit on those goods would have been the difference between those, which is €130. So we need to enter these figures into this tabular statement for November. So first of all, we sold goods and the cost price of those goods were €650. Stock is valued at cost price. So that €650 is going to come out of stock because we will no longer have those goods. Now, debtors, if we go down and look at the workings again, he still owes us €360 from the bad debt, plus the €780 from the goods we sold him, which you can see here come to 1140. So in total, debtors are going to go up by 1140. The bank overdraft is going to go down by the amount of money that we actually received. So we can see here, we actually received €840. So the bank overdraft is going to go down by €840. And my profit and loss balance is the last figure I need to put in. So for the profit and loss balance, this 1,200 was previously written off, and now we're going to get it all again. We received 840. He's going to give us the other 360, so we're going to be up 1,200. And we also made a profit of 130 from the goods we sold. So in total, our profits are going to go up by 1330. So my profit and loss balance is going to be 1330. So now I just need to total my assets and my liabilities to make sure that they balance. So my assets total €490. And my liabilities total €490. So again, it balances. Now, in December, I always leave 2 lines for December, one for the depreciation and the other one to tidy up May, the bank statement month. I need to work out whatever is prepaid or due. So I usually have 2 columns for those. So first of all, we're going to work out the depreciation. It says depreciation on buildings is 2% of book value. The depreciation charge is to be calculated from the date of revaluation or date of purchase. And it also just tells us that the depreciation for delivery vans is 21,000. So I just need to work out depreciation of buildings first of all. So the depreciation of buildings. Now, if I go back up and look at my buildings, the land and buildings was 660 at the start. Then at the 1st of January, I got land and buildings for 140. And because that was at the 1st of January, they would have been, they were revalued at the 1st. So there were 800,000 for the full year. And then at the start of February, I got additional buildings of 120,000, but I didn't have them for the full year. I only had them for 11 months. So to work this out, the depreciation of buildings. So for the full year, I had buildings of 800,000, but I have to take out the land element of that because that's not depreciated. So I need to take out the 130,000, and then the rate of depreciation is 2%, which gives me 13,400. Then for the next 11 months, buildings increased by 120,000 from the start of February. So 120,000 by 2%, which is the rate again, by 11 over 12, because I only had them for 11 months. So in total, my depreciation of buildings came to 15,600. So I go up to buildings, go to accumulate depreciation of buildings, and because it's a minus, this additional depreciation is going to increase that, so it's going to be minus 15,600. And we were told in the question that vehicles depreciation of 21,000, so it's going to be minus 21,000. Now, I'll just add those up. They come to 36,600. Depreciation is an expense. So if I add my 2 depreciations together, my profit and loss balance is also going to go down by minus 36,600. That's 0 expenses, so they're going to reduce my profit. So if I total this, I also get minus 36,600 on the balances. So you just add your 2 depreciations again and reduce your profit by the same amount. Now the last thing we need to do is to work out the rent receivable prepaid and the insurance prepaid at the end of the year. So the rent receivable, and rent receivable in these questions is always prepaid. The insurance or the expense can be prepaid or due, so you just need to be careful when reading the question and checking the date. So the rent receivable, if you look back at the question back at May, it says the rent receivable is 8,800, and that's to cover the period from May the 1st, 2018 to March the 31st, 2019. So from May the 1st to 31st of March is 11 months. How many of those months are for this year? 8. From May to December, 8 of those months are for this year. So 11 months in total and 8 months this year. So to work out my rent receivable prepaid, it's 8,800 divided by 11 because it was for 11 months and 8 of those were for this year. So if I work that out, it's 8,800 divided by 11 multiplied by 8. That works out to be 6,400. The insurance prepaid, if I go back to the question, the insurance was 4,800. That was for the year, 12 months. So it was for the year, and it ended on the 30th of April 2019. So 4 months were for next year, so 8 months were for this year. So I'm going to work out this year's amount, the same as the rent receivable. So I will have 4,800 divided by 12 because it was for a year, and 8 of those months are for this year, so I multiply by 8. So 4,800 divided by 12 multiplied by 8. And that comes to 3,200. Now, in some questions, there is insurance prepaid at the start. If there was, we would have to add it on. In this question, there isn't, so that's just going to be 0. So in total, this comes to 3,200. So I just need to put these figures into the tabular statement now. So the rent receivable, 6,400, is going to go into rent receivable. Here's a minus, because we put in the full amount of May, so we need to take out this year's, so 6,400, and that will leave us with the prepaid element of it at the end when we calculate the total. And for the insurance, prepaid is 3,200. So I go up to insurance prepaid. So we put that in, the full amount of plus 4,800. So I need to take out this year's element, which we worked out to be 3,200. So that is going to be taken away. And then the last figure will be the profit and loss balance, because we're after recognizing profit from the rent, which rent income is good, of 6,400. We're after paying insurance expense of 3,200. So the profit and loss balance will be the difference between 6,400 and 3,200, which is 3,200. And again, that's going to be a plus figure because we got more income from the rent than the expense that we paid for the insurance. So I just need to total these for December. So the assets for December came to minus 3,200. And the liabilities from December came to minus 3,200. So again, they balanced. And after we have that done, we are just going to add all the figures across. So land and billings, 920,000. Depreciation minus 15,600. Vehicles came to 120,000. Depreciation is minus 59,000. Stock 56,470. Debtors are 98,840. Bad debt provision is 3,908. Goodwill 22,700. And insurance prepaid 1,600. And again, if I total all of those, I get 1,141,102. And I can just check adding them down again, and I get the same amount. Now, we need to add up our liabilities. So first of all, I'm going to add creditors, which come to 75,000. I'm going to total bank overdraft, which comes to 48,660. Expenses due, 7,000. Ordinary shares, 590. Share premium, 101,000. Profit and loss balance, 144,042. Revaluation reserve, 173,000. Rent receivable prepaid, 2,400. And the total again comes to 114,102. And when these two figures here are the same, at least you know that your tabular statement is balanced and hopefully all the transactions will be correct. I just highlight to show that these figures should balance. So hopefully that was helpful. I'm going to do some more tabular statements questions soon. So if it was helpful, you can just subscribe to the YouTube channel and you'll get updates when I post more solutions. Thank you.